All right, welcome. Thanks for joining us today. Thanks to Nadex for hosting this session. We will discuss how to diversify your trade strategy for any type of market. Certainly, no matter what market you trade on Nadex, markets have been moving lately. Uh, Good amount of volatility, news flow, all kinds of things happening all over the world, which is somewhat typical, but it does seem as if it's been a pretty intense period lately. So we'll talk about ways to diversify your trade strategy. I'll talk about a few ideas for different types of trade strategies you may have heard about before, may be curious about. Always a good idea. Whenever you're trading, I think my opinion is diversification is a pretty solid value to have, whether you're talking about the types of trades or maybe types of markets you're in. Diversification is always a solid ingredient to have in any recipe for success with respect to trading. So we'll talk a little bit about diversification today. Last time, if you were with us, we talked about really how to build a process to establish some ideas for trading on a weekly basis, daily basis. If you're with Nadex, typically you're a very short-term trader, which is cool and exciting. Keeps life moving. And we talked last time about really I kind of walked you through what I do. There's 1,000 different ways to do it. I tell you what, as many traders as there are in the world as different approaches to a week, but just kind of walked through my approach last time we were together, how I approach a trading week, how I look at the markets, how I do some research, and I consider it one of my favorite parts of trading, and I think it's a really, really, really overlooked part of trading for experienced traders and new traders, how to generate trade ideas. A lot of times I feel like traders I talk to, if they're in a cold streak or struggling, they're just kind of chasing ideas. Maybe you read an article and it makes sense and you put on a trade, and then that doesn't work out. You watch a video and you put on a trade, and you're kind of chasing bits and pieces that you pick up, or maybe there's a technique, a scalping technique, for instance, that again you see on a video, or maybe you subscribe to a service, or read a newsletter or a blog post about, and you decide to try it, which is cool. You definitely, again, that's part of what we're talking about. You want to try different things and fold those things into your trade. But what we talked about last time is really having a process for doing that. There should be an approach you take. How do you research those techniques? How do you research those different markets? How do you have a 3 and 4 step process for building the ideas that you end up trading? I'm a big believer in having a consistent approach, because then when you want to tweak something, change something, you'll be able to see the hopefully improvement or changes across the board, and you'll be able to measure and look at how you did. And so that's why, when it comes to generating trading ideas, I just think it's really an overlooked skill to have a 3 or 4 step process to be able to do that. And then, we'll talk today, one of the great things about Nadex is the free and permanent demo account. If you have not yet registered for that, www.nadex.com/demo. As we talk about new techniques or new strategies or new markets that you're thinking about trading, we'll talk about some today. You can go into that demo account and hone your craft and practice. Another really overlooked, I think, skill is the ability to practice as a trader. We also want to mention that again, something else I love about Nadex is the dedication to education, trader education. This is part of a lead up to a webinar we're doing Friday. You'll get an email by virtue of registering for this webinar. You'll get an email about this. We'll be doing it Friday at noon Eastern, 11 o'clock Central, and we will go start to finish. We'll put all these pieces that we're talking about, we talked about last time, together, and we'll just go start to finish, end to end, how to build and execute a trading strategy here on Nadex. And so if you've got an account open and it's funded, that's really the prerequisite for attending that webinar. So you'll want to make sure you do that if you want to attend that webinar. It's for folks who have an open and funded account with Nadex. That'll be Friday, noon Eastern, 11 o'clock Central. Watch your email. You'll get a registration link. It's really a special deal we're doing Friday. It will be very detailed, very interactive. We will go under the hood, look at all the bits and pieces that myself as a trader put together, talk about the analysis we do. Again, we'll walk through our trade idea process, put together a slate of trades, how we do that, how we approach and attack those different positions. So plan to be a part of that. Really looking forward to that. It's going to be a lot of fun, and hope you're able to make it. Again, that's Friday at noon. Before we go any further, and again, today's topic, how to diversify your trade strategy for any type of market. Let's take a look at our risk disclaimer. As I hope you know, trading does involve risk. Certainly trading on Nadex does involve financial risk. It might not be appropriate for all investors. What we're doing today is purely for educational purposes. Nothing I say or do should be construed either implicitly or explicitly as a solicitation for a financial instrument, product, or anything else. Just here to share educational information for the sole purpose of education. As you know, trading can be volatile. Investors risk losing their investment on any given transaction. So make sure you're aware of that. Make sure you're careful as you trade. And just know, again, just to reiterate, today's purpose really is for educational purposes only. And, I'm here to share what I do, but anything we talk about or anything we discuss is not an endorsement, recommendation, or otherwise, just transparently sharing some educational content. All right, my name is Jason. I've been with Nadex as an analyst and educator here, doing webinars like this, write articles for the market news section of the website for a little over a year now. Absolutely love Nadex for a variety of reasons. We'll touch on many of those throughout our webinar, as many of them are the things that enable us to build a diversified trading strategy. Again, the range of markets, different types of trades you can build with a binary option or a spread, help us take advantage of many different market conditions. We'll look at that in this webinar and certainly on Friday in the premium webinar. So I've been sharing, webinars and articles with the Nadex community for a little over a year. Been involved in forex markets, analysis, predictive modeling, for large institutional clients, for smaller individual investors for over 10 years now. If you've been with me before on a webinar, I hope you know, or if it's your first time, I want you to know, main passion really lies with the individual trader. What we like to do at thedutchbook.com, where I share analysis and we build content and analysis for traders, is take institutional level resources, the high-powered models and analytics that we build for institutional investors. We also like to break those down and share them with individual investors as well. There's no reason you can't have the same tools and that same access to analysis and information and trading insight as larger institutional clients have as well. Just a passion of mine. It's how I'm wired. So thanks for being a part of this today. As I say on each and every webcast, the questions and insight and feedback I get from the community teaches me far more than I could ever share. So in advance, I want today's session to certainly be interactive, and I thank you for your insight, feedback, and questions in advance, because it certainly helps make this a richer, more engaging experience. So as I said last time, we built a plan. We talked about generating trading ideas. So today we're going to just recap some of the different strategies we can use within our plan. Again, this is really a lead up to Friday's session where we'll put all that together. We'll build ideas for these different, last time was ideas, trade ideas, research for trade ideas. Today we're going to talk about the different strategies that those ideas feed, and we'll put it all together and go end to end on Friday. So as I said, please add your questions, comments and feedback. Certainly helps me, and I learn a lot from each of you. So here's what we're going to discuss today, just real quick. And again, some of this is a recap from last time. Some of this may be review or refresher for you. For others, it may be new content in different areas. Again, today we just want to level set on some different strategies that we're going to use in what we build on Friday. So we'll talk about common trade setups. We'll talk about some technical indicators that I use. We'll talk about how to trade events today, momentum and volatility trading. Look at some opportunities to trade chart. Apologize for that. Hope everybody can hear me. I'll check the chat box here. Apologize for any technical inconvenience there. So not exactly sure where we may have dropped, but just to button up this slide and then we'll move on. The routine and the process that you have as a trader certainly going to impact your success with your trades. As I was saying, again, not sure exactly where the audio dropped off, but an individual trade is created multiple times. Mentally, you create the trade in your head that you want to do, you research it, and that part of the process, as it feeds into the actual trade that you may place in an order ticket, the tighter you can make that, the more consistent you can make it, and the more you can document it so you can go back and look and see how you did, is definitely going to inform your overall success as a trader. So tactically approaching your trading each week, what tactical principles can we stay mindful of as we trade? One, remember, it's about a lot more than direction. A lot of folks, whether you're in a cold streak or maybe you're a newer trader, folks get very focused on direction, almost consumed. Where's the market heading this week? Where's the market heading today? If you're a shorter term, 5-minute, 20-minute, hour trader, where's the market heading in those time periods? Which is cool and a lot of fun and certainly part of it. But you also want to stay mindful of, in your process, having, as you plan each trade, a consistent way you're looking at risk reward, consistent way you're establishing entries and exit points. We did, for instance, a webinar a few months ago on Ichimoku, right? And whether or not you trade Ichimoku or whether or not you use it to decide what to trade, it's one example of a consistent way to at least maybe establish entries and exit points, right? And so if you have that consistent approach, it's always a part of your process. You always have that established with each and every trade. Know why a system might be working. Again, that's why I always like to have a written plan at the beginning of each week that I then use as a journal as I go throughout the week. It's easy in hindsight. Let's say you have a huge week, which is, again, cool, right? That's why we do this. We want to have a lot of success, but it becomes easy then just to kind of ride that success and feel good about that and be excited about it. Those are the times you want to make sure you're documenting what you did, you're documenting what led to that success, so you can go back and look. And again, I'm not sure exactly where the audio cut out, but I was talking about a trader I was working with who, after documenting their trades, really just looked at it, and as simple as this sounds, hey, my win rate is much higher from 6 a.m. to noon. It goes way down the later in the day I'm trading. And so when you document that and you can see it, you know why your system might be working. There's probably more to it than just time of day. But if that's a variable, we're all, physical beings that, are better at certain things different times of day. That may be part of why a certain system is working, or at least identifying that in your current system, you can double down on it and say, hey, I'm going to really tighten this up and trade more if that's, in this case, the person's like, I need to really focus my trades in the morning, and then I'll use the afternoon for, research time and preparing for the next day. That can help you understand why your system might be working. Certainly want to stay balanced in all we do in trading. It's a whole nother webinar into itself, but using it, we'll talk a lot about objective data as we build our plan, and on Friday's session, I'll take you all through my sources of data that I use. You want to balance, though. You also, it's okay to have a gut feel as a trader. It's okay to trust that gut feel, and the better I think you can marry the two and stay in balance between, your subjective point of view as a trader and the objective evidence, when those are in congruence, I think you'll have the most success. Keep it simple. Any trader I work with relays simple ground rules, and one of them, and this is I apply it to myself. How do you define keeping it simple? For me as a trader, I know I've got a decent trade that's simple and straightforward enough to be successful if I can explain it, why it may work in 1 to 2 sentences, preferably 1, and why it may not work in 1 to 2 sentences, again, preferably 1. A lot of times when folks are chasing, and maybe you're taking advice from another trader or an article you just read, and you're putting trades on, if you can't explain in 1 sentence or less why it may work and why it may not work, chances are you don't have it A, understood well enough on your own end, and then B, at a simplified enough level. Trading should be inherently a pretty straightforward thing. One of the great things about Nadex is it does give you a very straightforward way to trade a wide range of markets. You may put on some strategies that are more complicated than most, and we'll talk about a strangle trade here in a second. You can make a strangle trade very complicated, but at the end of the day, I can say in 1 sentence or less, let's say it's oil, and we'll look at an example here in a second. We're coming into the inventory report. I think the price is going to move all over the place. I want to put a strangle trade on and harness and trade based on that volatility. This is just a hypothetical example, but so even though a strangle trade is can be, you can make it more complicated in your own mind. When you break it down to that level, I think you have a pretty decent shot at success. We talked about practice. Certainly want to stay positive. There will be trades that do not work out. There will be trades that do work out. Don't want to get too high when they work out. Don't want to get too low when they don't. In my world, from my point of view, they're all offering you lessons. They're all offering you education. If you're committed as a trader, and that's a big if, that's up to you. It's for you to decide what level you want to commit. But if you're committed and in it for the long term, depending on your time horizon, you need to give yourself a really healthy amount of time to invest for education, for learning. And I have one of my favorite sayings: trades speak louder than words. The best way to learn about trading is trading. And so those trades that don't work out, that's a lesson that the market has taught. I'm humbled by the markets every day. The market has taught me something I needed to learn. As long as I'm documenting it in my journal/plan, as long as I'm learning from it and using it to the best of my future ability, then that's a worthwhile endeavor. And even though the trade didn't work out like I thought it would, it still has benefited me with the benefit of some positive education. So we talked last time about building a plan. This is the basis for kind of as we head into Friday's webinar. We're going to in real time build a trading plan, look at the things that I look at as I do that. Review the calendar, read and research. We talked about some sources last time. If you'd like to check out last time's webinar, you can go to the YouTube channel, the Nadex YouTube channel. Fantastic repository of video resources. We talked about some different places I researched to generate trading ideas, review charts and build strategy, and then craft a weekly plan. For me, this is a linear process. I always start with a calendar, and then I dig into a bunch of research on those different things on the calendar that pique my interest. Everybody's got a different approach. I like to trade markets, and I like to trade events that I find interesting. It's just how I'm wired. Some people hardly remember, or hardly, they don't even, they may trade an index and not really understand what makes up the index. They just, can trade the indicators and the technicals, and that's fine. And that's their deal, and that's cool. And you may be like that in other markets. Just my personal preference. I like to trade things I'm really interested in. So I'll review the calendar first, then do some reading and research. Then I'll look at charts and strategy, and then I'll craft my weekly plan for how I want to trade the markets that week. So, quick look at an economic calendar. If you don't have one, please just find one that works for you. There's a ton out there. This is from IG.com. I always plan my week around, I start with the economic calendar. That's where I start. Now, there's something that's on a calendar that's very consistent for me. Oil inventory. I trade oil a lot, and so oil inventory report. Every Wednesday morning at 10:30 Eastern. I'm there. So even though it may not show up on this calendar, and we're going to talk about this and how we build our plan, certain events each week, Baker Hughes and oil on Friday mornings, mortgage reports if you trade the indices on, Wednesday morning. There's certain events that I can also plan my week around, and then I'll bring in a couple other high magnitude, high profile events. And to really understand. And even if you're not an event trader, I don't want to make it seem like this is all going to pivot around specific events, because it's not. We also talk about the importance of understanding just general market flows around some events, right? If it's Federal Reserve Week, or if unemployment numbers are coming out, you may exclusively trade this indices. You'll still want to understand when those things are happening, and you want to plan your trading around them, even if you don't explicitly plan on trading them. So what we're going to talk about today briefly, in really leading up to Friday's premium webinar, is just the different strategies that are available. Once you've kind of got that week planned and those different sources of research, data, however you want to approach. And again, I'm just walking you through what I do. I fully expect you'll just take bits and pieces. But my process, that's where I start with those 4 things: calendar, read and research, charts and setups, and then, I really plan out my week from there. So I look at really these 6 things as potential trading strategies. Again, these are mine. These are not the only 6. There's 600. They're a fantastic Nadex educator, Gail Mercer, Daryl Martin, John Skelton from Apex. And I don't want to start listing them all because I'll leave somebody out, but check out all the Nadex educators, the analysts. They all have different approaches. Pick up something from each of them. They're all fantastic people at the top of their game. Just walking you through the 6 that I personally find, beneficial for me to trade. Or what I like to trade, or this is how I trade. So there's other ways to do it. There's other people who maybe do 5-minute scalps better. I know there is, because you're not going to see a lot of 5-minute scalps as part of my routine. It is more news and event based than some, which is, again, you may not be exclusively a news and event trader, but hopefully I can share with you some ideas that can help. Again, diversify is really our theme. Diversify your strategy so you pick up a few new things, so that if the market's flat all week, but we got the Fed at the end of or NFP at the end of the week, we can take advantage of a flat market, and then we can then in turn trade on NFP event-based volatility on a Friday, for instance. That's a hypothetical. So that's really what we're talking about on Friday, is how to diversify and really build a strategy around some of those opportunities. So again, these are the 6 kind of buckets that I look for trades in. Major events, do look at chart patterns. There's a few I like and trade pretty consistently. And again, I always recommend consistently trading something to really learn how it works. You can always deviate and diversify as you go. That's what we're talking about. But I trade a lot of reversal patterns, a lot of head and shoulders, and forex, etc. Trade regular data releases. Talked about Baker Hughes, NFP, weekly jobless claims, correlations. One of my favorite topics. We did the webinar on it a few weeks ago. Do trade correlations. Yen and gold, for instance. We'll look at some other correlations like volatility and the Nasdaq. Obviously a big one lately. You can't explicitly trade a volatility product on Nadex, but you can look at the level of volatility in the market and draw a correlation for an index and build a trade based on that. And Nadex is a great way to take advantage of that volatility. So we'll talk a lot about correlations. That is probably my just favorite strategy, the one I have the most fun with. The dollar and gold. We talked about the yen and gold, the euro and the pound. Great correlations out there that you can trade. Technical setups, we'll look at, my list of kind of 4 or 5 indicators I use to establish technical setups, and then momentum and volatility. Again, just recapping real quick from last time, but you'll want this for Friday. If you're planning on joining us for Friday, and I encourage everybody to, this will be the heart and soul of what we do, is really build out a plan and a journal, or work from a plan or a journal. So this is a simple look at kind of what I use, simple spreadsheet. Make it your own. Have something that makes sense to you. It really, the actual columns aren't nearly as important as insofar as they're important to you. So I'll always look at, obviously you want entry date, the FX pair, the market you're trading, your entry, your stop, your target, you'll want, some way to kind of establish that at the outset. That's why that's highlighted in yellow. And then as you look at actually placing a trade, those middle columns, you want to look at your risk reward, your position size, and then your eventual exit. And then on the right side is kind of where you get into the journaling, right? How many pips, or whatever market, however you're trading, you want a way to kind of keep score and look at your upside or your downside, your planned risk reward, your actual risk reward, your exit date. And then a really key column, is make sure you document. I'm always surprised at talking to folks, and you're looking through the trade journal or looking at their their just archive history of trades. And because you'll work with traders and they'll say, well, I don't need a journal. I've got all my trades in my account history. Well, that's cool, but the account history doesn't tell me, what was the setup I was looking at? What caused me to pull the trigger on this trade? You really, if you take nothing else away from our time together, make sure you're documenting on each trade. And again, for better or worse, it's got to be outside your account history, because your account history doesn't do this for you. What was it a head and shoulders pattern? Was it a double bottom? Was it RSI indicator? Was it another indicator that you subscribe to? It was flashing green or red, or was it a piece of data? Make sure you're documenting your setup, so that you can go back and see what setups are working for you, what setups you may go back and look over the last month. Your win rate on chart patterns is entirely different than your win rate on using indicators or other sources of data. And I know a lot of us feel like, or some of us maybe feel like, well, I kind of, I know that, right? Like mentally, I kind of keep track. And if you're on Nadex, you're trading as actively as I know many of you trade. It's probably harder to do than you want to admit. And two, you just over the course of a month, it's your wins will take on, your big wins and your big losses will take on outsized importance in your own mind. And a lot of us have the opportunity to build a nice record as a trader, potentially, with a series of smaller trades throughout the month. And so as you document that and see where the successes that you may not remember a month later happen, and where the lessons that you learned, documenting that setup, I think is really key to be able to go back and look and see how you did. All right, one of the core strategies we're going to talk about, and that you have the opportunity to trade here on Nadex, is certainly with volatility. And the title of the webinar is in any type of market. Volatility can happen in trending up markets, trending down markets. A lack of volatility, a flatter market, can be traded as well. But one of the things I look for as I head into any particular week is, where is there the potential for volatility this week? Nadex products give you a unique opportunity, very unique opportunity in my opinion, to harness and capture volatility while still have downside protection and the ability to control your own risk. So a lot of trading and a lot of products that you could trade out there, you can generate rewards, but it's very related to the level of risk you take on. And that's also true on Nadex, there's no question. But the products allow for you to control your own risk. You pay for the trade up front. You're not trading on margin. things aren't getting out of hand or away from you before you even know what's going on. So I love to use some of those benefits of trading on Nadex as I approach a highly volatile market or a highly volatile situation. One of, in the world I trade in, one of the more volatile data releases each week is the oil inventory report, which we'll talk about here in a second. We'll talk through this example. So using that example here on this visual, the three keys for me as I head into a week and I look for volatile, call them pockets of volatility in the markets, and again, 1 week it might be non-farm payrolls and their potential to impact stock indices. And another week it might be the Bank of Japan is meeting, and that could really impact the yen, which also impacts gold. Brexit obviously is going to have an impact on, stock indices in Europe and the euro and the pound. So I'll look for those pockets of volatility based on my calendar and really map those out. Again, one that's consistent if you trade oil markets is the oil inventory report. So I really want to adhere to my three keys. I want to plan ahead, I want to build a strategy, and I want to execute. So one of the ways you can trade volatility or trade a volatile market is with what's known as a strangle trade. And so this is, I just speaking from my own personal experience and preferences, one of my favorite ways to trade. One of my, we all have strategies that we just really like, and I like trading strangle trades on the Nadex platform. I think there's some unique inherent benefits with Nadex that allow you to execute strangle trades. I think the markets and the range of markets that you can trade on Nadex are cool because there's, chances are some level of volatility somewhere in the world that you can find with the Nadex market. And strangle trades are fairly, once you get them down, you can apply the same type of strategy to any market without being intimately, deeply familiar with all of the ins and outs. So basically, if you're not familiar, if you are, this will be a cool refresher. This is an actual example, January 11th, 2017. You could go back and look up the details if you'd like. It's actually a pretty volatile time in markets. It was right around the inauguration of the current president. A lot of things in Washington, D.C. were in flux. That impacted oil markets certainly, as maybe new agreements were going to be hammered out, new relationships, infrastructure spending is obviously pipeline, the Keystone Pipeline conversation, and some of those things were on the table. So a little more volatile time than most if we get in our time machines and go back to January 11th, 2017. So what a strangle trade is, it's a strategy that, again, I like to employ, and we'll build some of these into our plan on Friday. It's a possible strategy if you're unsure about direction, but you anticipate volatility. So as on January 11th, as we looked at the oil inventory release at 10:30 a.m. on Wednesday, we said, I don't know which way this is headed. If you don't trade oil, if there's a big build in inventory, that's going to be bearish, and the market, logically speaking, typically would go down. If there's a big draw in inventories, the market goes up. But it's notoriously hard to guess on a week-to-week basis exactly which week, inventory is going to go up or down, right? Like it takes, hundreds of data points for the federal government to pull that together each week from different producers and suppliers and pipeline operators. It's really hard for an individual investor, even an institutional investor, to get that right consistently. So with a strangle trade, or you think, your opinion is this is going to move, you just don't know which direction. So what you would do is you would look for strikes on a binary option. You would take strikes on either side of the current market price, sufficiently out of the money so as to require some distance to be traveled, and then to allow you to pay a price that ultimately what you want to do is buy two options that will be profitable if only one ends up in the money. Okay, so we'll build that for you here over this slide, but essentially what you need to do is find two strikes sufficiently out of the money so that in paying for both, you'll have enough upside to pay for both if one of them comes up in the money. So in this hypothetical example, we're going to buy 2 options at $10 each, one above the market, one below. And just so I'm absolutely accurate here, you're going to sell the option above, buy the option above, sell the option below. So in this example, each option, the one above and the one below, is going to cost us $10. So our maximum risk net of fees is $20. You can't set limits if there's potential for profit overall, but we'll just keep it simple here. So in this case, market's right around 51.45. We'll take a strike at 51 and we'll sell it for $10, and we'll take a strike at 52 above the market and we'll buy it for $10. So in this case, the trader can set a limit of 45 on the buy order, 55 on the sell order. It's really up to the individual trader. Risk is capped, as I said, at $20, which is what you pay for both trades. If both trades are to reach their target, and again, it really depends on how much the market moves and your time horizon, but it is possible with a strangle trade for both of your trades to end up at some point in the money. The profit's $70. If only one trade reaches what you've set out as your limit, profit is $35. Trader can hold one or both to expiration, which would obviously adjust these numbers, but again, in no scenario, net of fees is your risk ever more than $20. So in this case, market's at 51.45, you sell a strike at 51 for 10, you buy at 10 with a strike at 52, and you can see in this case, after the inventory report, it was very bullish for the market popped, hit your strike above the market, and you made enough from both of those trades, or from that trade, to pay for both of your options. That's the essence of a strangle trade. Now, as I said, the market can come back down and actually dip through. Let's say you buy this on a weekly, and you could sell it when it rises above, cash that out, wait and hold your option that's below the market, and once that dips down, you could sell that one, possibly ultimately ending up profitable on both. The absolute opposite is true. If the release is very not volatile and the market doesn't really move and stays between your 2 strikes, both would end up unprofitable. And again, with your maximum risk of being $20, that's the amount that you would be out. This is one of my favorite ways of trading on the Nadex platform. Again, you can apply this to any market where you can apply it to any market anytime, but for me, it really works best around very volatile, what you anticipate is a volatile news release, volatile event, NFP and euro dollar, or NFP, non-farm payroll. It's a monthly release by the federal government on how many folks are added to the employment rolls. It's typically a pretty market-moving release potentially. That can move the stock indices, that can move the dollar. So that's another case where you could buy a strike sufficiently above the market, sell one sufficiently below. You don't know which way NFP is going to break. You just think it's going to move the market, and you hope it just moves the market enough so that one of your trades is profitable and enough to pay for both of your options and leave a little left over. All right. Sorry about that. All right, so we also talk about momentum. So, in other cases, we have momentum-based trades. We've had some unique opportunities over the last, let's call it several months, several weeks, several days. Momentum can work in either direction. Stock indices have obviously moved sharply higher over the last year at times, sharply lower at times. We'll also watch. These are cases where you may have a strong trending market, but you don't have a particular catalyst, like an event, like we were talking about in our volatility-based trades. So we also, will fold into our plan, and again, we'll do this Friday at noon Eastern, 11 o'clock Central. please, if you haven't already registered for that, it should be in the email you receive as a part of being a part of this webinar. If you have a fully funded, or if you have a funded and active open Nadex account, you'll be able to attend that one. You also talk about how to trade based on trends or momentum. One of the keys to that that we use is, this is where we get into technical indicators. So we won't use technical indicators really for the volatility-based trades that we just talked about. And this is where we start to talk about, okay, how do we diversify our trading? Some folks will use these three technical indicators that I have up on the visual on every trade, which is, again, if that's your approach, then, good luck, and that's cool. You certainly can do that. But if you want to diversify, part of what you need to do is start to segment or separate out some of these approaches so that you're doing what you set out to do and diversifying your approach. So on a volatility-based trade, we won't necessarily use an indicator, but we will on a momentum trade. So if I've got a particular market running really strong, say gold's really trending hard, or any flavor of what you want to trade, a currency pair, et cetera, we'll look at it. And we talked last time about some ways just to scan different markets and just get a cut of the 10 most trending currency pairs, or what markets are running really hard. And then we'll look at indicators, and we'll look at moving average, convergence, divergence, MACD, or OBV, on balance volume. It's another one I like, or RSI. Use RSI a lot as well to confirm the momentum we're seeing, right? And so when we're looking at, each week, I'd like to have a couple of momentum-based trades in my plan, in my repertoire. I'd like to have a couple volatility-based trades as well. But again, I'll use unique indicators just for those momentum-based trades to confirm the level of momentum that we're seeing. Talked a second ago about event trading. This is a bit of a recap from last time, but the event trading plan. Again, you want to identify event, define the markets, and your thesis, what you expect to happen. Again, it doesn't have to be direction. Certainly don't expect anybody on this webinar to, guess at the number, in this week's NFP, non-farm payroll, but, what do you expect to have happen? You need to expect something in order to place a trade on it. So certainly for a volatility-based, event-based trade, you would just want to theorize that, markets are going to move and be volatile. Or, as I said, you can put on a trade that, if you want to sell a strike above and buy a strike below, you're just betting on a lack of volatility. And your opinion is that markets will continue to trend kind of where they are. You want to build strategy and then execute and manage as you go through an event. Types of events: central bank meetings, weekly market data, monthly data releases, special events. So, and we talked last time, and this kind of juxtaposing these last two types of trades, which we've talked about. If you're really trading a lot of events, and maybe you're having some success, or but you're attending this webinar and you'll be with us on Friday because you want to diversify away from that. Then we'll want to talk about some ways to pull more of a momentum-based strategy, not to get away from events, but just to complement, right? And so we'll talk about using RSI, using OBV, using MACD. And where I think some folks get confused, but where I really like to break it down and keep it simple is there's different types of events. If I'm going to trade based on expectation of something happening in a Federal Reserve meeting, I'm not going to use on balance volume or MACD. It's just my approach. Others might. That's great. But in order to diversify my strategy, I'll still use MACD that week and maybe another market because I'm trading momentum. But if I'm trading a Federal Reserve meeting and I expect, gold to move sharply because I think maybe there might be an unexpected announcement around interest rates, then I'll just build a volatility-based strangle trade. I won't necessarily need those technical indicators. So I'm diversifying my strategy. I've got some momentum trades where I've got some technical indicators working. I've got some event-based trade, whether it's weekly market data, monthly data releases, et cetera, where I'm not necessarily using those same tools. And then correlations as well. If you'd like more information on correlations, because correlations can get pretty technical, I'll have my email address up at the end. Feel free to send me an email. Drop a note in the chat box here, or check out the webinar we did a few weeks ago on how to trade correlations. Just go out to the Nadex YouTube channel, search for it. Another great way to diversify your trading strategy, for instance, you may be really actively trading gold, and maybe you've had a lot of success, maybe you've just done it for a while. One of the easiest ways to start to diversify away from that and branch away from that is to look at what correlates with gold, or maybe what correlates with gold. Gold and the yen have typically historically had a relationship. Well, the yen and the Nikkei have a relationship. So you may start looking at some opportunities to trade the Nikkei, even though that's, a couple markets away from gold on the one hand. On the other hand, there is some inverse relationship there that you could use as a bridge to learning more about the Nikkei, since you're already tracking gold and really have a good handle of the rhythm and cadence of that market. You're already a step ahead learning about, trading the yen and the Nikkei. This is another great way. Some of the things we're talking about is diversifying your strategy. Other things is, just diversifying the markets you trade. You use the same strategies with binary options and spreads that you've been using, but you could diversify the markets you're trading. A lot of folks will, be really into copper and silver. Those are cool markets. Or vice versa, you may really be into the Aussie. Well, the Aussie and copper and silver all have pretty strong correlation. The London, the stock exchange in Great Britain, the FTSE, also will correlate at times. Have a relationship with metals, because so much of metals goes in and out of mining companies that are traded there. Obviously, in Australia, heavily commodity dependent. Copper and silver price can absolutely impact the value of the Aussie. So again, you can start to learn about different markets, but you have a leg up because you already understand the dynamics of a market that it correlates pretty well with. And then again, the indicators, and we'll talk a lot more about this Friday and walk through, okay, I'm seeing this, so I'm going to trade that. But as I said, these are the 5 I'll use, and I'll use these in a variety of situations, in a variety of markets. Won't ever trade exclusively based on indicators. It's just my approach. Want it to be a part of what I'm seeing fundamentally, what I may see in some data. I trade a lot quantitatively, and then I'll also looking for confirmation in the indicators. Like I explained earlier with momentum, typically we're seeing a momentum in the market already, but I want to go back and confirm, okay, what am I seeing in RSI? Is this at the level of momentum that I expect? Average true range, absolutely great indicator for trading on Nadex, trading binary options if you're not using it. I highly recommend. We'll take a look at some scenarios with average true range on Friday. Just really talking through, the typical distance this particular market will cover in a time frame. There's few data points that are more important in the Nadex platform than knowing, okay, I'm trading gold. How much can gold move in the next hour, the next 4 hours, the next week? Average true range will give you some metrics around that as an indicator. We talked about MACD, RSI, stochastics, and then simple moving averages. Easily overlooked, and I whenever I bring up moving averages, folks will share, well, I really don't trade moving averages. I don't know if they feel if it's a little simplistic or what, which is great. They are pretty simple, and you might be looking for a more sophisticated tool, but my opinion, but it's a pretty well-informed opinion, a lot of money around the world moves based on moving averages, and I think your average trader would be shocked. I've built very sophisticated predictive analytic models for some of the largest institutional traders around. And anyone who's being really honest with you about how those things are built mathematically, quantitatively, ultimately gets to, it's really a complex arrangement of essentially moving averages, and there's basic triggers that large institutional trading houses will use around things like 50-day and 200-day moving averages. And even if those aren't specific things you feel like trading, those are things that other folks who trade a lot of money trade, and so you'll, at least as a second order effect, want to know where those things are proportionally to your position, or if you're considering a position, because, for instance, when oil, large globally traded commodity, it breaks its 200-day average, that can cause other traders to quote unquote deleverage or liquidate positions, and it can just accelerate once that 200 level is broken. So just something you want to be aware of as a trader as you're in the market. If you're coming into trading, and maybe, as we were talking earlier, let's keep talking oil. You're trading oil and you're looking at a Wednesday inventory report, and you've got it circled, and you think it could be a pretty volatile release, but let's say we're sitting right on the 200-day moving average. Well, you'll want to know that as well, because that's, if it could be even more volatile if it starts to break to the downside below that, for instance. So certainly something that we'll want to keep an eye on. All right, I am going to check real quick. If you got a question, comment, please drop it in the chat box. All right, someone asking about a copy of the journal. Yeah, I tell you what, the next slide I'm gonna put up my email address. I can put it up now. Just drop me a line if you'd like. This will come right to me, and I can just reply back with your copy. I could send you just a blank. I mean, it's just, I'll send you a template for the trade journal, trade plan that we're talking about. So I think that's the quickest and easiest way. It's just literally something I've kind of created. It's not fancy or sophisticated at all, but it's just a spreadsheet, and I'll just, lay it out for you how I lay it out. So Jason@thedutchbook.com. Again, that email comes right to me, and I'll just reply back with a copy of the spreadsheet. Couple comments about the audio, and again, I apologize for that. Thank you guys for sticking through that. Okay, this is a great question. How do you gauge if you're relatively successful in a certain strategy? And this is something we're going to talk more about Friday. Probably didn't spend enough time on it today, but this is where goals come into play. Because really, your level of success and what success looks like is for you to define. And so you want to have short-term, long-term goals, probably in anything you do, but this is, we're talking trading. And you want to measure yourself against those goals. I think that's pretty common sense, and I think you guys get that. The thing I would really strongly stress, and this is, I think, what you do need to hear from me. I don't think you need to hear from me. You need to set goals, but you got to give yourself time. You have to give yourself time, and if you need that time on the demo account, take it. Use the demo account. I mean, you guys, I am continually shocked. The really folks I really looked up to, great traders, folks with track record, folks with just tons of success in history, and some of them, Nadex educators, guys I look up to, people I look up to, still try new stuff in a demo account. They've been at this for years, been trading Nadex for years, been trading other, markets and options, and still try it. They try new stuff on the demo account. Now you're going to want to switch over, and obviously, have a plan and a process for converting over to, a live account. But even after you have the live account, if you've got a new indicator, a new charting system, or something you want to try out, try it out, and use. It's a free and permanent account. It's not something that, once you go live, you can't go back to the demo, which is fantastic. So your level of success, to answer the question directly, depends on your goals. So you need to line those goals out. You need to measure yourself. But what many folks aren't doing, and what you do need to hear from me, is give yourself time. almost every trader I know overestimates what they can accomplish in the short term and underestimates what they can accomplish in the long term. So as you write out your goals, you almost have to force yourself to do it. Really make sure your goals are reasonable in the near term. Almost everybody I walk through this exercise starts out with really amped up goals in the near term. Take them down a notch. You know, part of what you make up front is education that if you're committed to this over the long term, will pay you back for the next year, 5 years, 10 years, you know, rest of your life, if that's how long you trade. And you have to be a successful trader, to be a sustained trader, you have to get to a place where you view the education you receive through your trades. Trades speak louder than words. The only way to learn about trading is trading. You have to view that as a tangible asset. If you purely view it as wins and losses and money in and money out, you'll get frustrated. You'll hit a streak that doesn't go your way. You'll get frustrated and you'll bail. And if trading's not for you, then you know that's okay. But you've wins and losses. I'm not speaking, you know, upside or downside exclusive. I'm just saying that that's what you receive. Let's say you trade for a year. You have a year of trading education, far better than anything you could ever pay for. You have a year of education. That is a tangible asset. And let's say that year you broke even financially. You just got a year of free education. Period. And I think, again, if you don't view it like it, that's okay. This is just my opinion, but I think you have to view it like that to have sustainability in this line of work, or in this, you know, however you view it, as a hobby or a second, you know, side deal, or maybe you're a full-time day trader. If you break even over the next year, and I hope you don't, I hope you know, hit whatever goals you set. To me, that's a year of free education. And you'll build on that and get better and better and better over time. So, you know, again, just remember that. I encourage you to stay mindful of that principle. Almost every trader starting out, they overestimate what they can do in the short term and underestimate what they can do in the long term. You can have a really awesome record as a trader, but you got to put the time and effort, and you got to receive the education one way or the other, because it's, you know, it's something that takes place over time. So I know that probably wasn't as specific as the fantastic questioner intended. You know, there's a measuring stick, but it's relative to you and your goals. Just give yourself the time and space to reach those goals, and you know, I hope you get there. It's a great question. All right. Okay, so getting a question about, you know, just, hey, I'm new to this, trying to learn many new things. What do you recommend? For one, and I mean this sincerely, this is why I'm here, Nadex is absolutely the place. This is why I'm here. Their commitment to education. If you go out to the Nadex YouTube channel, favorite it so you continually get updates, get attached to their YouTube channel, you'll see this for yourself. It's not all even Nadex specific. Now, there's a lot of resources on how to trade on Nadex, but there's, you know, resources on how to trade candlesticks. You can apply to anything. There's resources. You know, I did the thing on how to trade correlations. It's not Nadex specific. It's just how to trade correlations, and you can, you know, we talk about how you can use the Nadex platform for that. But fantastic wealth. I like video, so that's why I like the YouTube channel. Fantastic array of resources on the Nadex YouTube channel. All video. You can watch them as many times as you want, totally free. You're not paying anything. You can get a fantastic education in how to trade from the Nadex YouTube channel, period. So check that out. Keep coming to webinars like this, again, if you're new, and attend a lot of different ones. Fantastic folks on the Nadex platform. You know, Gail and Daryl and John and some other folks all have. What's cool is I think Nadex has assembled some folks that all have unique and different but complementary approaches, right? So Gail will trade at times some very short-term markets, 5 and 20-minute binaries. I typically will trade, something over a day or a week, and I'll trade a lot of energy and, metals, and Gail might trade a lot of FX. Now she'll trade all different kinds of stuff, and I'm just using Gail as an example. But so you have opportunities to learn from different folks with different points of view, but very complementary. The third thing I'd recommend, so the first was YouTube channel, second is live webinars, third is definitely take advantage of the demo account, nadex.com/demo, free and permanent. It's not something that only lasts for a week and then it goes away, or 30 days and it goes away. Free and permanent demo account. Trades speak louder than words. The only way to learn about trading is trading, or best way. So take what you're hearing from webinars and YouTube channel, apply it to the demo account. And then third or fourth, and this is really up to you, you just got to read, in my opinion, you just got to read a lot, and you'll find your way there. We talked last time in the last webinar in this series I did about different things I read weekly. I think great traders just, they read, and they're curious people, and they keep asking great questions. And that's probably the last thing I'll leave you with on this question is, so much of our work as traders gets back to the questions that we ask. I tell folks all the time, a chart is only as good as the question you told it you want answered. A chart is just answering the question that you asked it. So that's one example, but keep asking great questions, keep learning. This is why I love markets. There's always something to learn. You're never going to be there. There's nobody that's an expert in all of this. There's no great trader, even those that have been doing it 20, 30, 40 years that I know, and have made more money than I'll ever see in a lifetime doing it. They still read more than anybody I know. So continue to ask great questions, continue to read, watch the videos on the new YouTube channel, Nadex channel, come to the Nadex webinars. It's by far, in my opinion, in this industry, across any exchange you could trade on, the best assembly of educational resources, bar none, is on the Nadex platform. I really believe that. That's why I'm humbled to be here with you today. Yeah, so if you go to YouTube and just search for Nadex, you'll find the Nadex YouTube video channel, and just hit favorite, and just you spend a lot of time in there. There's so many great resources. So just look for Nadex on YouTube and enjoy it. A lot of good video there to watch. All right, we are up on time. I am grateful for your time and your level of engagement. We will be back Friday. We'll put all this together. So join us on Friday. You'll get an email. Register on the email. This is not a webinar coming up on Friday that you're going to see out on the calendar. This is kind of a special premium deal just for folks that attended this one. And folks that have opened a funded account on Nadex and attended this webinar will then be able to come Friday. It's a behind-the-scenes look. I'll take you all through. Here's how we build trades. Here's how we build trade ideas. Here's how we execute them, end to end, start to finish. But again, you can only attend. It's an exclusive deal. You can only attend if you have a funded account, and if you've attended this webinar as a prerequisite. So check that email. It'll also have a copy of this webinar today, the video. So if you want to watch anything, again, you can. Register, and then be back Friday, noon Eastern, 11 Central. It's going to be awesome. We're going to go under the hood, behind the scenes, and build a trading plan start to finish. And you get to ask any questions, send me any thoughts and insight and ideas you want while we do it. That's all for today. I'll see you Friday. Good luck and have a fun rest of the day. Thanks for being a part of this.